There's been an extraordinary surge in wealth in the United States since the end of 2019. Household wealth soared by $44 trillion, or by 38%, between then and the first quarter of this year. During that period, household assets increased 12 times more than household liabilities. To put that increase in wealth into perspective, $44 trillion is large enough to pay off all U.S. government debt, with $9 trillion left over, and 1.6 times the size of everything produced in the United States last year. This surge in wealth is shown here. From the end of 2019 to the first quarter of 2024, household net worth, in other words, wealth, increased from $117 trillion to $161 trillion. This explosion of wealth has fueled consumption and played a leading role in driving U.S. economic growth during this period. So what caused it? The simple answer is that household assets increased in value more rapidly and from a much larger base than household liabilities increased. From the end of 2019, household assets grew by $48 trillion, or 36%. From $133 trillion to $181 trillion, while household liabilities grew by just $4 trillion, or 24%, from $16 trillion to $20 trillion. Let's look at the details, beginning with the household liabilities. Residential mortgages and consumer credits combined make up 85% of household liabilities. Mortgages 65%, consumer credit 20%. Since the end of 2019, mortgage debt has increased by $2.6 trillion, or by 25%, to $13 trillion, and consumer credit has increased by $800 billion, or by 19%, to $5 trillion. Now, let's look at the household's assets. These are broken down between financial assets, 68% of the total, and non-financial assets, 32% of the total. Since the end of 2019, financial assets have increased by $29 trillion, 31%, to $123 trillion. Non-financial assets have increased by $19 trillion, or by 48%, to $59 trillion. Here's the breakdown of non-financial assets. Non-financial assets are dominated by real estate assets, which make up 85% of the total. Consumer durable goods make up another 14%. Since the end of 2019, owner-occupied real estate has increased in value by $16 trillion, or 53%, to $46 trillion. Residential mortgage liabilities have increased by just $2.6 trillion to $13 trillion. With the value of residential property increasing much more than residential mortgage debt, homeowners' equity in real estate has surged by $13 trillion, or 69%, to $33 trillion since the fourth quarter of 2019. Next, financial sector assets. Here's the breakdown. Household corporate equities, or in other words, stocks, make up 28% of the household's financial sector assets. Pension entitlements make up 26%, currency deposits and money market fund shares 15%, other equity 13%, mutual fund shares